Another year, another PDAC. It is day one, and my first guest from the sidelines here of the world's largest mining show, Rick Rule. Welcome back.
Always a pleasure to be here with you. Thank you.
It's been too long. It's really your official return to the mining stage.
That's correct.
So we missed you, Rick. Excited to talk to you today because Warren Buffett making headlines earlier this week with his thoughts on gold. Now we know Buffett has never been a huge fan of the yellow metal, but he had some harsh words saying the magical metal, gold, was never a match for American metal. So he does not see it as a safe haven. What did you think when you saw this, Rick?
3 comments. First of all, I'm a huge Buffett fan. I've been a Berkshire Hathaway shareholder for a very long time, so the remarks that follow are not intended to disparage Buffett, but rather, in fact, to talk to his, necessary disclaimer, because he's a great guy. Were I Warren Buffett, were I as smart as Warren Buffett, were I as disciplined an investor, and as good an analyst, I probably wouldn't need gold either. Part of what gold does is it protects you from your own worst instincts. It's an enforced form of savings, and it protects you from the depredations of government. If you are someone like Buffett, who can manage money for 15% compound internal rates of return over 50 years, you don't own gold. Sadly for the world, there's only one Buffett. For the rest of us who are mortal, the insurance offered up by gold is critical. The second thing that Buffett said is that gold offers no yield.
Right.
If you are Warren Buffett and you manage $400 billion and you get gauged quarterly, although he always disclaims this quarterly focus, I can understand his point of view. Sadly, I don't manage $400 billion. I manage a somewhat smaller amount of money. And the stability of gold at the same time as the demonstrated upside when there is a tailwind in gold makes it an absolutely critical asset class for a mortal. Buffett doesn't conform to the moniker mortal. He's immortal, so he doesn't need gold, but all of the rest of us do.
So do you feel he's doing a disservice to investors who follow him religiously by putting that out there?
I don't. I also think that when gold returns to favor, irrespective of what Buffett says, that investors will pick and choose based on their own paradigm. The truth is that most investors don't want education, they want affirmation. So if people don't want to confuse themselves with gold, they take the fact that Buffett said that gold is unnecessary as an excuse not to do the work to manage their own portfolio. When gold returns to favor, and they want to invest in gold, they're going to say, well, Buffett's 90. What do I care what he says?
Right.
I think he's a sideshow relative to gold.
Right. Well, he also kind of took a bit of a jab at the fear-mongering crowd, right?
Yes.
Saying, well, when they're saying that a recession is coming and, everything is going out the window and we need safety, you need to run to gold. And like you said, he was saying gold hasn't proven to succeed and shine in those situations.
Buffett's right if you are Buffett. Buffett has pointed out, and I've experienced this, that 4 or 5 times in his stewardship, the price of Berkshire Hathaway has fallen by 50% in an 18-month time frame. If you look at those declines over 40 years, you don't even see them on the graph. But if you're immortal, if you're Daniela, or if you're
Warren Buffett,
or if you are one of the people who watch Kitco, while you can survive a 50% decline, it's decidedly unpleasant. From my own point of view, gold is an absolutely necessary component in most portfolios. Buffett is right that the ascent of man is an unbroken bull market that's gone on for 6,000 years. So if you look at it in a decade-long perspective, he's right. But if you look at it as a mortal, he's wrong.
Let's get Rick Rule's feeling on gold right now. You never mince words. Every time I ask you, is it gold's return? We've seen a very good rally, albeit Friday aside. Do you like what you're seeing in the gold market?
I don't care about the gold market in the very near term. I believe, first of all, that every portfolio has to have some gold in it all the time, up or down. But I also believe, and we've talked about this before, Daniela, gold moves for many reasons, but the most important determinant in gold for the last 40 years has been faith in the purchasing power of the U.S. dollar. particularly as expressed by the U.S. 10-year Treasury. The U.S. 10-year Treasury has been in a 35-year bull market. From that point of view, I think that bull market is either over or close to the end. If you believe that gold trades contra to faith in the US dollar, that suggests on its own that gold is ready for its own bull market. If the bull market that trades contra to is over, it suggests that market will do well. Why would that be? That one's simple. $22 trillion in on-balance sheet liabilities. Your listeners their eyes will glaze over because $1 trillion is too big a number to comprehend. $120 trillion in off-balance sheet liabilities. People say, what's an off-balance sheet liability? Look, I'm 66. I'm an off-balance sheet liability. Social Security, Medicare, all the promises that my generation made to ourselves, you have to pay. That's why I'm bullish about gold. There's two ways out of this. You can default honestly. That is your generation telling my generation, you made the promises, you pay them, we're not gonna. Or you can default dishonestly by inflating away the net present value of the obligation. Good for gold.
Shifting gears now to mining stocks. The miners outperforming physical bullion this year, the opposite of last year. Do you like what you're seeing in the mining space?
Miners were oversold. The bounce had to happen. My outlook for the miners really is mixed. There are too many of them. This merger thing needs to keep going. We need, as an industry, much smaller general and administrative expense relative to assets under management. I mean, much smaller. If this continues to happen, the gold equity sector will really surprise to the upside.
What will we do with all the extra PDAC booth space?
That's the PDAC's problem.
No, but in all seriousness, you mentioned the mergers. But do we need mega mergers?
Yes.
Of the size of possible Newmont Barrick?
Yes. I mean,
is that the best thing for shareholders?
That it is not the best thing for redundant management. It's absolutely the best thing for shareholders. They believe that they can cut the combined G&A. By the way, I'm not talking about the price. I mean, a take under is silly. Frankly, it's silly. But the rationale for the merger is that you can reduce general and administrative expense by $350 million a year, $1 million a day. Now, that would be one of the best mines in their portfolio. In other words, saving $350 million a year is the same as generating $350 million a year. At 10 times EBIT, it's $3.5 billion in additional market capitalization. But what makes it better than a mine is that it doesn't deplete. It's $1 million a day if you manage it well for the rest of time. It has to happen. And it's great for the industry too, Daniela. People haven't thought about this. But if you take these big companies and you have them sell the assets that are no longer big enough to manage to work for them, they can take a second or third tier mining company and double the size of it. The people who get made redundant can be used. I remember when Placer Dome went away, I was able to hire Neil Adshed and Andy Jackson. There was intellectual capital that was redundant for Barrick that was greatly beneficial to Sprott. So I think this is wonderful.
Well, I asked the shareholder question because Newmont stock has outperformed Barrick stock. And when I was interviewing Pierre Lassonde, he said it's obvious who has created more shareholder value.
I don't care personally who ends up running it. What I care about is that they use the Denver office as an excuse to cut the Toronto office in half, and they use the Toronto office as an excuse to cut the Denver office in half, and that they save shareholders $350 million a year. That's what I care about.
All right, fair enough. Rick Rule, always a pleasure having you on. Thank you for your comments.
My pleasure.
And happy PDAC.
And to you.
And it's just the start. We're going to have so much more content for you. So be sure to stay tuned to Kitco.com.